Hello and welcome back to the Basic Accounting series. Today's topic is tangible and intangible assets. It's a continuation to types of assets. In the previous video, we discussed current and non-current. Let's focus on tangible and intangible. What are tangible assets? Here we have example land and building, property, plant and equipment. So land, building, machinery, I can see it. This whiteboard, I can see, feel, touch it. It has a physical presence. So all those assets which have a physical presence, which you can see, feel and touch, are tangible assets. What are intangible? Exactly opposite. They do not have a physical presence. We cannot see, feel or touch them, but they have a monetary value. Now, investment is the best example to understand the difference because investments can be tangible as well as intangible. Let's take an example. Suppose I have invested in real estate or physical gold. I can see the physical gold. I can see the land, building purchased by me. So these type of investments are tangible. I have purchased, let's say, futures and options. Now, these are call options, put options. So, right to buy or right to sell. I cannot see it, feel it, or touch it, but it has some monetary value. So, they become intangible investments. So, this is the basic difference. Now, what about the treatment? Now, all the tangible assets are recorded in the books at the purchase value, that is, they are capitalized and then they are depreciated over the years over its useful life. Similarly, tangible assets are also capitalized but they are amortized over its useful life. Let's take an example of patents. Patents, let's say I am a pharmaceutical company and there is some research institute that has developed some medicine. So I purchased the rights for 5 years and let's say I paid them 10 lakh rupees. So for 5 years I paid them 10 lakh rupees. Will I record this in the books of accounts? Yes. I will record this, that is I will capitalize it and then, now this benefit is only for 5 years. For the first 5 years, since the patent is for 5 years, only I can manufacture this medicine. After 5 years, once the patent expires, any company can manufacture. So this 10 lakh rupees doesn't hold any value. So at the end of 5 years, this should be zero. So what will I do? Generally, the intangible assets are now see, we don't use the word depreciation, we use the word amortized over their economic life in straight line method. That is 20% every year I will reduce its value. Similarly, copyrights, I'm a publishing house, I purchased copyrights from an author for 5 lakh copies. So accordingly I will amortize. Now the superstar here of intangible assets is goodwill. What is the difference between other intangible assets and goodwill? Goodwill is recorded only when you have purchased it. Example, there's some coaching classes called XYZ coaching classes and they've got a very good reputation in the market. You just have to put the board XYZ coaching classes and the students will flood into your coaching classes. Now this is the reputation. So if I buy this business, let's say all the assets of this business are worth 1 crore rupees, but still I paid something extra. I paid 2 lakh rupee, 25 lakh rupees on account of goodwill. What is this? I paid them for the brand image that they have in the market. Now, can I see this brand image, see, feel, or touch it? No. But it's there. It has some monetary value. My business will run more efficiently because of that brand name. That is goodwill. So, I will record this only when I have purchased it from someone. Let's take another example. Let's say I also run a coaching classes, Pujari's coaching classes. So, can I say I have a good business, students come by this name, but can I say I have a goodwill value of 10 crore rupees, so let's record it at on the asset side? No, I cannot do it. I can record this 25 lakhs because I have paid for it, I have bought it, purchased it. So I can record goodwill only when purchased. So it cannot be capitalized unless bought or purchased. What is the second difference? The way it is treated. Now, goodwill is not amortized or depreciated. It is tested for impairment. It is tested for impairment. Now, there are many accounting standards. Accounting standards just dealing with impairment of assets. So, we're not going into details. We'll just test. It is suggested that at least annually the goodwill should be tested for impairment. So, every year I will test if it is still worth 25 lakh rupees. If yes, continue. If no, I will record it as impairment loss. If the value of goodwill has gone down, so whatever the difference, that will be recorded as impairment loss. Now, when I say it is tested annually, that is suggested. The usual way is we test it annually. But if there are any major changes in the industry, there was lockdown, so people will stop coming to the coaching classes. Now, this is a major event. So, in that case, you can test for impairment more than once. So it is annually is suggested, what is given in the standards, usually followed over the industries. But if there is any significant event in the industry, major changes in the business, you can test it any number of times. And if there is an impairment loss, accordingly the value will go down. So that is the difference between goodwill and other intangible assets. I hope you understood tangible and intangible. Specifically, the superstar was goodwill. Thank you and happy learning.